Have you been concerned about the market crashing? Do you want to know what went on in the month of May in the real estate market? I have all of that information for you up next. What's up, guys? Dr. Adrian A, Gentry, aka Dr. Real Estate Jax, with another housing monthly update for the month of May, given in June, to help buyers, sellers, and investors understand what went on in the month of May to make better informed decisions. So, I'm sure you guys know that the market is crazy out there. So today, I'm going to change up my typical format just a little bit. Normally, I would compare the current month to the same month that prior year. But because last year we had COVID, we all know it was not a normal year. So we're going to compare May 2021 stats to May of 2019 to get a better comparison of a normal market so we can better understand what's going on right now and where we're headed. Then we're going to get into the topic that everyone has been asking. Is the market going to crash? What we're going to find out is the market hasn't changed much in terms of new listings and sold listings. So the two stats that we are going to look at are the number of listings in May and the amount of sold listings. In May of 2021, we had 3,817 new listings compared to May of 2019, where there were 3,957 homes listed. Sold listings in May 2021, 3,334 homes sold. May 2019, there were 3,091 sold, which is only about a 7.6% increase in homes sold this year, which is very interesting, because the amount of homes both sold and listed indicated normal buying and selling activity. What really changed in this market is the increase of demand of homes, and more demand and less supply equals higher competition and higher prices. So days on market has dropped from 66 in 2019 to 33 days on market. Supply of inventory dropped from 3.6 months of inventory to less than 1 month, driving the average sales price in May of 2021 to $363,000. And it does not seem to be dropping anytime soon. And we're still in the battle with higher lumber prices and less labor for new constructions. Right now, 41% of homes are being sold over asking price. Now, this is the first time since I think it's the beginning of 2003 that this has happened. I can understand why people are comparing this market to the market of 2007, 2008, and asking the question, is the market going to crash? But this is a completely different. I was doing mortgages back during that time period, and I can honestly say that this market definitely is not that market. We aren't going to go into all the reasons why the market crashed back then, but I will focus on three things I would like to take a look at to kind of give you the answer. Is the market going to crash? One being national negative equity. The second, the affordability index, and the third, interest rates. Let's start with national negative equity. Now, a study done by CoreLogic showed that the average annual gain in equity was $33,400 per borrower. Now, this is the largest average equity gain in the last 10 years. And the national negative equity share was down to 2.6 in Q1 of 2021. That's the lowest it's been in over 10 years, meaning the number of homes that are underwater that have little to low equity has decreased substantially from the years leading up to the crash. Now, if we look at the chart, we'll see between 2005 and 2009, national negative equity was between 21.78 to 38.85. So even if the market were to turn, Unlike the years leading up to the last crash, homeowners have significantly higher equity in their homes. Instead of foreclosure, most companies would most likely just modify the loan. The next thing we're going to take a look at is the Housing Affordability Index. Now, some of you may be wondering, what is the Housing Affordability Index? Well, I'm going to tell you. The Housing Affordability Index measures whether or not a typical family earns enough income to qualify for a mortgage loan on a typical home at the national and the regional levels based on the most recent price and income data. The National Association of Realtors Affordability Index takes three key metrics: home price, mortgage rates, and wages, and boils them down into one singular number. That number tells us if the average Joe or Jane can afford a home. If it drops too low, that means that the average American cannot buy, and warns us that we're about to have a housing bust. This is a key number because every housing bust in the past 50 years happened when affordability was below 120. The Housing Affordability Index for this past quarter, 176. So, even though the prices are still rising, Americans can still afford homes, which brings me to interest rates. Now, if we begin to compare the interest rates and home prices in 2006 and 2007, we'll see that the prime interest rates were around 6.41 in 2006 and 6.34 in 2007, nearly double what we've been seeing in 2021, meaning you would pay more for a $200,000 house in 2007 than you would pay in 2021 per month for a mortgage. So, just based off of numbers, not emotion, not biased, the indicators say that the market is not going to crash. Will it correct itself at some point? Absolutely. But if you've watched my video on the cost of living in Jacksonville, you'll see housing prices in Jacksonville compared to other major cities is relatively low. Right now, it seems that the Jacksonville market is headed towards the housing prices that you would find more in line with major cities like Miami or Orlando or Tampa, but it's still a great time to buy. So I know I've said a lot of information. What does that mean to you? If you are a seller, you have more equity than you've had in the previous 10 years. So it's time to start planning and jump off the pot. Do you want to keep the equity in your home or take it out and put it into an investment account? Or use it to buy or build what you want while interest rates are still low? This is a question I've been asking every one of my sellers for the last couple of months. If you are a buyer, keep waiting if you want to. Prices are not going down anytime soon, and it's more probable that the interest rates will go up and it will cost you more for less house. It's time to stop waiting. If you are an investor, out-of-town investors have definitely found out that we have cheap homes with profitable rents. If you see it, grab it. We're seeing some of the off-market properties going for well above what they went for last year. Most of the great homes that are being placed on the MLS are receiving cash offers, and they're coming from large investment firms that are buying and holding. So if you see something on the market, you may want to grab it because it seems though rates are going up and most people will be gaining equity as our prices continue to surge. Well, that's it. Another housing update for the month of May. So what I wanted to do, if you found any value in this at all, please like, subscribe, push the bell notification, share. Hey, write me a comment down below if you have any questions at all. I would love to interact with you. Thank you so much for watching this video. Until next time, choose excellence at everything that you do.